All right, welcome to the strategy scripts section. This section is where we're going to start building significantly on the information we've learned so far. We're going to start building trading tools that we can actually use to trade the markets with. We can backtest using these scripts. We can automate our trading depending on the strategy using these scripts. However, there are a lot of hidden risks with TradingView strategy scripts that we need to cover. So to begin this section, we'll cover the basics of strategy scripts, like all of the different syntax relating to these scripts, how to place orders and trades, and what the most common functions are that we'll be using. And then after we have a firm understanding of how strategies work in PineScript, we'll cover some of the hidden risks you need to be aware of, and then we'll start building actual strategy scripts. So let's get started with the introduction to these style of scripts. So first of all, what is a strategy script? It is a variation of the indicator script type. And by that I mean it has access to all of the inbuilt functions and variables that indicator scripts can access, with a few rare but important exceptions, which we'll cover throughout this section. These scripts are used for automatic backtesting and forward testing. So backtesting on historical data and forward testing on live market data. If you're not familiar with what backtesting is, we'll cover that throughout this session, so don't worry. We'll come back to that. So strategy scripts have access to most indicator functions, with a couple of exceptions, the most notable being that we cannot use alert condition function calls in our strategy scripts. Now, it wasn't long ago, a few months ago, where we couldn't even generate alerts on strategy scripts, at least not custom alerts. You could generate alerts when an order was filled, but that was about it. A few months ago, just before the release of PineScript version 5, the TradingView team added the alert function, and this function we can use in our strategy scripts, which we'll get to when we start coding. But it's important to mention we cannot use the alert condition function in strategies. So because strategy scripts can access most of the indicator functions, they can be used to plot data onto your chart like any other indicator script. But these strategy scripts can also place, modify, and cancel mock orders or mock trades in the strategy tester system, which is how we backtest and forward test these scripts. They also have access to essential strategy performance information, such as max drawdown, equity return, profit factor, win rate, all of the key metrics relating to a strategy. Now, there are some issues with the tester system, especially if you're trading Forex or crypto. It definitely, to me at least, seems to be more optimized for stock backtesting, but I will show you a few techniques we can use to get better data out of the strategy tester system, such as exporting all of your trade history and importing that data into an Excel spreadsheet where you can perform more advanced analysis on the data that your scripts output. Now, strategy scripts are not intended for automated trading with real orders, and by that I mean the scripts themselves and PineScript itself was never intended to be automated, unlike a language like MQL or other charting platform scripting languages that were designed with automated trading in mind. PineScript is purely a price analysis language. But with that being said, there are some ways you can achieve automation with PineScript with a little bit of creativity and the utilization of third-party APIs. So for crypto, there are dozens of options out there. For Forex, there's only really PineConnector and AutoView. There are a couple of other options out there, but those two are the most popular and most fully developed tools for automating your Forex trading. And for stocks, to be honest, I'm not sure if it is even possible to automate stock trading with PineScript. I haven't seen any third-party APIs out there for that, but then I haven't searched for them either. So if you do find one, please send me an email to support to let me know about it, and I'll research that API. But for the most part, automation in PineScript is limited to Forex, crypto, and any brokers and markets that work with PineConnector or AutoView. Now, keep in mind, throughout this course and throughout this section, I'll be using the term broker more often, but if you're a crypto trader, broker just means whatever exchange you're using. So with all that said, let's jump over to the official documentation, and I'll break down all of the key info that we need to know before we get started with coding these types of scripts. So here I am on the official user manual. I'll leave a link to this below the video. Let's do a little bit of reading here, and I'll explain what some of this information means. I'll alternate between this user manual and the TradingView platform, and I'll show you some visual examples of some of this information. So a strategy is a PineScript that can send, modify, and cancel buy and sell orders. Strategies allow you to perform backtesting, which is emulation of a strategy trading on historical data, and forward testing, which is emulation of a strategy on real-time data. A strategy written in Pine has many of the same capabilities as a Pine indicator. However, when you write a strategy script, it must start with the strategy function call, this guy down here, instead of the indicator call. If you don't use this annotation function call, PineScript won't give you access to all of these strategy functions and features. Now, strategies may plot data, but as I mentioned, they can also place and modify orders. They also have access to essential strategy performance information through specific keywords. The same information is available externally in the Strategy Tester tab. And once a strategy script is calculated or run on historical data, you can see your hypothetical order fills. So I'll show you a quick example of this for those of you who are unfamiliar with strategies. So here I am on the TradingView charts with a strategy script that I wrote applied to my chart. If I open up the strategy tester down here, let's break down some of this information. This is the page you will normally see, overview, and it will tell you your win rate. So this is how many trades actually won versus how many lost. It'll show you your profit factor, how many trades the script executed, and then it will also show your net profit as a currency return and a percentage return. And it will also show your max drawdown as a currency and percentage return. It will tell you how much your average trade won and how many bars you were in a trade, involved in a trade on average. So this script I have added to my chart right here is a 1 hour time frame strategy. It basically just trades inside bars at a specific time of day, which is 4 p.m. my time. That's why you see these background colors changing. That's highlighting the 4 p.m. bar on my chart. And if I get an inside bar on that 4 p.m. time of day, my script enters long or short. It's a very simple strategy, but it is quite profitable. Now you can see up here, I have a bunch of trade metrics drawing onto my chart. These metrics are not included in a strategy script. I had to write the code to display this information manually using tables. I'll show you later in this section how to do this, but for now, just ignore this info. Let me turn it off, in fact. Draw backtester off. Now, one thing I want to mention before we jump into the other tabs here is this warning down here. It says, caution, this strategy may use look-ahead bias, which can lead to unrealistically profitable results. This is a false positive warning. If I click learn more, there is a bunch of info here explaining how you can cheat the strategy tester system to basically give results that are not accurate. So you can make your script be able to see what the bar that you're entering your order on did before that bar closed. So if I scroll down here, this is what is causing this warning to pop up. If I open up the source code here, you can see that I've set calc on order fills to true, which means that my script recalculates after an order has been filled. Let me find an example of why this is important. And here's an example right here. So if I open up the source code here and I turn this off, close that window, save my code, you can see this particular trade here. If I zoom in, what's happening now is that my signal is being detected on this bar. My order to go long is being executed on this bar. And then my take profit is being hit on this bar, but not being filled until this bar. So what I needed to do in order to prevent this from happening is turn calc on order fills on, which is this setting here. Recalculate after order is filled. You can turn that on by default in your script code by adding the calc on order fills parameter. Don't worry, we'll cover all of this in the next lesson, all of the strategy function parameters. But now you can see that my script is correctly exiting my take profit on the same bar that it entered long on. And I've set the script up so that if the wick here had hit my stop loss, it would have exited the trade for a loss instead of a profit, even though our take profit was hit. These are the kinds of things you need to be careful of when creating TradingView strategy scripts. TradingView does not accurately simulate intra-bar price action. What I mean by that is, we're on a 1 hour time frame here. If this bar here had hit my take profit and my stop loss on the same bar, let me see if I can manipulate my risk reward profile here to cause that to happen. I'll set my stop loss to 0.25. There we go. Now you can see that my stop loss is being hit now, and this has turned into a losing trade. There is the potential in PineScript and TradingView that my script entered long here, price rallied, hit my take profit, And hold on, I'll use a different color here so it's easier to see. So there is the potential that TradingView entered long here, or PineScript entered long here. This bar on its intra-bar price action, so on a lower time frame, price may have rallied, hit my take profit, then come down, hit my stop loss, and then closed up here. It's highly unlikely, but it is possible that price action played out like that. The strategy tester cannot simulate what happened on the lower time frame. Don't ask me why. It's a real shame. I wish that TradingView would fix this. I guess it probably has something to do with the computational power required to simulate the intra-bar price action, considering there are millions of users on this platform using millions of scripts. That's my best guess at why they don't add this functionality, because it doesn't seem that hard. Most other platforms have this feature or behavior. But anyway, all it means is that when you're writing your scripts, you need to be very careful of false results. So one way we could double check how this situation played out is to use the bar replay tool. So if I click bar replay, and let's load this bar here from this bar here. So if I click there, we now have our entry bar, entry signal, and our entry execution. And this bar is hitting our take profit and stop loss. Let me draw these levels on my chart, and then let's drop down to a 5-minute time frame. And here we go. So now you can see that price action definitely hit my stop loss before it came up and hit my take profit. This is literally the only way to truly confirm what actually happened under circumstances such as this. Now, it's not a super common occurrence depending on how you write your strategy scripts, but it is something to be aware of. And we'll cover this in more detail throughout the course as we start building actual scripts. But anyway, let's move on. So because I have calc on order fills set to true, it says here, when the parameter calc on order fills is true, the backtesting engine performs an additional calculation inside the bar after the order is executed, in contrast to the usual situation when the strategy is calculated only at the close of the bar. At the same time, during the calculation, the strategy gets access to many additional bar parameters, for example, the high and the low values. So you can write a strategy script that abuses this behavior and will show excellent performance while backtesting, but was actually not profitable. You can do that by setting your take profit at the high of the bar that you entered on, which you obviously wouldn't know until after you entered. So in this case, that would be this bar here. We wouldn't know the high and the low of the previous bar until this bar. So that is one danger of the calc on order fills being set to true. My script doesn't reference the high and low or any other bar data other than the take profit and stop loss price. So in this case, we can ignore this warning. And many of my scripts need the calc on order fills to be true, but I write my code in such a way that it does not cheat, because I trade my own scripts and I don't want to lose money trading a dodgy script that isn't accurate. One other thing I need to mention here as well, while we're here, we have this warning popping up, is this right here. Strategies using Japanese style candles will not be accurately executed. And by Japanese style candles, I mean Renko, Heikin Ashi, and maybe Kagi, I don't know how to pronounce that, but some of these Japanese candles that use averages of price will not give accurate price readings. So if I turn on a Heikin Ashi here, you can see that the bars look very different. That's because it's employing a different price analysis technique. However, my script is executing its trades based on the price values of these bars. Even though these bars don't actually represent price values, they're averages. I'm actually not familiar. It's been a while since I studied Heikin Ashi. I can't remember how it calculates its values, but you can see that it's more of an average. It's more of a smooth sort of candlestick. Whereas if we go back to candles, we have clear highs and lows and wicks. Heikin Ashi does not have that. Same with Renko. This is even more obvious what's going on here. So if we open up the strategy tester, you can see this has changed my metrics completely, because the strategy tester is not executing its trades based on the underlying candles or the actual prices. It's executing them based on these Renko bars. And if we look at this bar right here, this red bar, if I put on a horizontal ray at the top and the bottom of this red bar, and we drop back to a candle chart, you can see that the values are very, very different here. The reading we're getting is very different. If we're basing our entries and exits off bar closes, there was no bar close on either of these blue lines. And that is where your order would actually be filled on your broker. But these candlestick charts do not account for actual price values, and so they basically cannot be used with strategy scripts. You need to avoid using these different candlestick patterns. Stick to candles and bars. Bar charts will work just fine. Candles will work just fine. Hollow candles will work just fine. Line might work just fine. Yeah, line works fine. Area and baseline probably work as well, but beware of these other bars down here, candle types. So now that we've mentioned that, let's have a quick look at our performance summary. This gives us a whole bunch of metrics about our performance, our strategy performance. We'll cover some of this info in future lessons. It's not that important, to be honest. I don't really pay too much attention to this stuff. I do in my Excel spreadsheets, my backtesting spreadsheets. But because my net profit is in yen and I don't trade in yen, I trade in US dollars usually. So it's kind of useless data to me mostly. But we'll cover this in later lessons. Next up, we have our list of trades. This will list every single trade that our script took. The entry price, the exit price, the time, the position size, how much we won and lost, and a whole bunch of different metrics here. So if I can scroll up here, we have our drawdown, our run-up, our cumulative profit, the profit on the trade, how many contracts we traded, the price our orders were filled at, the date and time, whether we went long or short or exited a trade. And then we have our type, long or short, and the trade number. The next button here, export, I don't think most of you will have this button. I believe this is a feature of AutoView, which is a Chrome browser plugin that I use to automate my trading through Oanda. We'll cover that in future lessons because that's getting way ahead. We need to understand strategy scripts before we understand how to use AutoView. But if I click on this, it will export all of our trade data to my clipboard, and I can paste that into an Excel spreadsheet or a Google Sheets spreadsheet or any other spreadsheet, and I can perform extra analysis on this data. For those of you who do not have this button, you can still export your data by clicking on this little download button here. This will download a CSV file, basically a spreadsheet file with the same data inside of it. But we'll cover analysis of our strategy results in a future lesson. For now, let's jump back over to the documentation and read through the rest of the information we need to be aware of. So I'll skip over the example strategy because I've already showed you my personal script that I am using. To apply a strategy, you just add it to your chart like any other script, and then it reiterates here, when applying strategies to non-standard charts, Heiken, Ashi, Renko, etc., it is very important to realize that results will not reflect real market conditions. Orders on these types of charts will be executed at the synthetic price levels used on these charts, which often do not reflect real market prices, and thus lead to unrealistic backtesting results. I already explained that and showed you how that works. Now, backtesting and forward testing. On TradingView, strategies are calculated on the chart's available historical data, which is referred to as backtesting, and then the scripts will automatically continue calculations or continue running your script when real-time data comes in, which is forward testing. So your script will show you how your strategy performed across historical data, and then once it catches up to the real-time bar, it will continue executing. So if you leave your charts open with a strategy script applied, you will basically be forward testing your script on real-time data. It's probably a good idea to do that on some of your scripts because that way you can identify when your script does something dodgy, like looking ahead, for example, using the calc on order fills parameter. There are a lot of different ways you can accidentally break your script or make your script cheat. We'll cover those throughout the lessons to come, but it's important that you're aware of that. So by default, during both historical and real-time calculation, the code is calculated only on the bar's close. So when the bar closes, your script executes its code. But when forward testing, you have the option of configuring your script to calculate on every real-time tick. So every time price moves or volume changes, your script can recalculate, which is achieved using this calc on every tick. This only applies to real-time bars. It will have no effect on historical bars. You can turn this on in the settings menu, in the properties menu, or you can do it in your code by setting this parameter in your strategy function at the top of your script. And as we've already covered, you can also set the strategy to perform one additional calculation after an order is filled. I showed you that with my script, and I explained why that was necessary. In my script, because it is trading momentum and it is trading inside bars, it often has very tight stops and targets. It is a frequent occurrence. Sorry, the mailman just rocketed past on his motorbike if you heard that noise. It's a frequent occurrence in this particular strategy that the bar that my order enters on also hits my take profit or my stop loss, and so I need my script to recalculate after the order is filled to reanalyze its take profit and stop loss to see if the bar that we entered on hit either one of these. But as we mentioned, this parameter can also give you access to the ability to cheat in your scripts. So obviously not a good idea to do that. Moving on, we then have the broker emulator section here, which explains how the strategy tester emulates price action in terms of how it executes your trades. So TradingView uses a broker emulator or simulator when running strategies. And unlike in real trading, the emulator only fills orders at chart prices. So there is no slippage in the strategy tester. There is no spread. You can simulate spread, but you can't simulate a dynamic spread that fluctuates. It has to be a fixed spread. And so this is important to understand. What this means is you might have a script that performs extremely well on a 1 minute chart, but when you go to trade it, it's terrible because of the spread. A 1 pip spread on a 1 minute chart makes a hell of a difference compared to TradingView's strategy emulator, broker emulator, which will execute your trades, your take profits and stop losses at the exact price you set them at. So unlike in real trading, the emulator only fills orders at chart prices, which is why an order can only be filled on the next tick in forward testing and on the next bar or later in back testing, in effect after the strategy calculates, your script code executes. Now, the following logic is used to emulate order fills, and I'll go through these one by one. If the bar's high is closer to its open than its low, then the broker emulator assumes that intra-bar price was moving this way. Open, high, low, close. That's what this diagram here is showing. So it will not simulate the actual intra-bar price action. It will try to guess what happened first. This is obviously a problem, especially if you're using limit orders in your scripts, which I highly recommend you don't use in your strategy scripts. We'll get to that in future lessons. I personally only ever write scripts that execute trades based on candle closes. That eliminates the majority of issues that you can run into with inaccurate results from the strategy tester. Anyway, number two, if the bar's low is closer to the bar's open than the bar's high, then the broker emulator assumes that intra-bar price was moving in the opposite direction. The open to the low, to the high, to the close. The broker emulator also assumes that there are no gaps inside bars, meaning the full range of intra-bar prices is available for order execution. So this is really only going to be an issue on extremely low liquidity markets, where gaps in price is common. In most major markets, most major stocks, most cryptos, most forex markets, you're not going to have many gaps on inside bars, depending on the time frame. Let me hide my script and go down to a 1 minute time frame here. So you can see that there are some gaps here in this on this time frame, on this 1 minute chart. The strategy tester will assume that these gaps did not exist. And so if you, for example, let me find a good example here. Let me go to early morning as a great example. Here we go. So if we're running a script on a 1 hour chart and there's this huge gap here and our take profit fell in between here somewhere, then on that higher time frame that our script is running, it will execute our order right here, even though there was a gap on intra-bar price action on the lower time frame. So keep that in mind. That can be a problem on the lower time frames. That's why most of my scripts are higher time frame scripts. Even though you can trade the lower time frames and automate that trading, there are a lot more risks involved. You need to be very experienced with PineScript and with trading to be able to trade those lower time frames profitably. You need to understand all of the hidden risks, spread, commission, slippage, gaps in price data, all of that. And then finally, even if the recalculate on every tick option is enabled in the strategy properties, the broker emulator's behavior still uses this above logic. I believe this would not be a problem on real-time data because your script will receive the information about the bar in real time, but on historical data, recalculate on every tick does not affect your historical bars, only the real-time bar. Moving on, we'll skip over most of this info because we'll cover this in lessons to come. But one important thing I want to mention here is that you can use a setting called verify price for limit orders. So in PineScript, if you use a limit order and price touches that limit price, your order will be filled immediately regardless of spread and all of that. But if you want to, you can simulate spread by setting verify price for limit orders to a certain value. So for example, if you set backtest fill limits assumption to 1 in your strategy function call, and the minimum price movement is 0.25, so this would probably apply more to a stock, for example, and a buy limit order is placed at 12.50, the current price is 12.50, then the order will not be filled at the current price until it is 0.25 pips or points or whatever you want to call this lower than your buy limit price. So this simulates what it would be like in real life if you place a limit order. If you place a limit order on any market, that order will not be filled until price exceeds the limit order by the spread. So you can simulate that in PineScript. We'll probably cover this in future lessons. It's not that big of a deal, really, but it is something to be aware of, especially on those lower time frames. Moving on, we have our order placement commands. We'll cover this in more detail in future lessons, but we have a bunch of options here. Strategy.entry places entry orders. So first of all of our strategy functions fall under the strategy namespace or library. So if you type in strategy.control space, you'll get a full list of all of the strategy commands we have to work with. And the following commands are used for placing and managing orders. We have strategy entry, order, and exit. So entry only places entry orders. It is affected by the pyramiding setting. So pyramiding is just allowing your script to open more than one trade in any given direction. And you also have an option here to specify the max amount of risk that your script can have at any one time. So we'll cover some of this more advanced information in the lessons to come, but strategy.entry is used basically to enter our positions. Strategy.order is used for placing both entry and exit orders. It is not affected by pyramiding, whatever our pyramiding settings are, and it allows you to create complex entry and exit order constructions when the functionality of strategy.entry and strategy.exit will not do. To be honest, I don't think I've ever used this function before. I only ever used strategy.entry, strategy.exit, and strategy.close. So those are the ones we'll be focusing on the most. But if you need to read about this function here, you can just come to the official documentation and click on that, and it will explain how that function works. For the most part, you should be able to use entry and exit just fine. That should cover most, if not all, of your strategy requirements, especially if you're writing scripts that account for the limitations in the strategy engine. Generally speaking, the more simple your script is, the more likely it is to give accurate results and not be affected by some of the quirks of the strategy tester and broker emulator system. So as I mentioned, the most common functions we'll be using is strategy.entry, strategy.exit, which allows you to exit a trade based on an ID. So when you enter a trade, you need to give it an ID. And then when you exit the trade, you need to give it that same ID. We'll cover that in future lessons when we start building out our scripts. So for example, in the code down here, we have strategy.entry with an ID of buy. If you wanted to exit this buy trade, you'd need to pass in the same buy string into your strategy.exit function. And then we have a bunch of information here about OCA orders or one cancels all groups. We'll cover this in future lessons. It just means that you can have multiple orders that are linked together so that if one gets filled, the rest get cancelled. Or if you cancel an order, the others get cancelled as well. It's just a way to group your orders together. Then it says here, every command placing an order has an ID, which is a string value, which is a unique order identifier. If an order with the same ID is already placed but not yet filled, the command modifies the existing order. If modification is not possible, for example, conversion from a buy to a sell, then the old order is cancelled and a new order is placed. We'll cover this stuff in future lessons. Let's move on. Closing market positions. And all of this here is just saying that when orders are shown in the list of trades in our strategy tester tab, they are all linked according to first in, first out rules. So if an entry order ID is not specified for an exit order in the code, then the exit order will close the first entry order that opened a market position. Again, we'll cover this in future lessons. And then there are a bunch of code examples here, which we'll skip over because when we get to the next few lessons in the course, when we start building strategy scripts, this will all become more familiar to you through practical examples. Now, I've already briefly explained what OCA groups are. They're just one cancels all groups. So we have a couple of different options here. We have OCA cancel. If you set your strategy OCA type to OCA.cancel, then as soon as one order is filled, the second order or any other order that has the same type and the same OCA name will get cancelled. Then we have OCA reduce. This group type allows multiple orders within the group to be filled. As one of the orders within the group starts to be filled, the size of other orders is reduced by the filled contract's amount. So this is very useful for exit strategies. So once the price touches your take profit order and it is filled, the stop loss is not cancelled, but its amount is reduced by the filled contract's amounts on your take profit, thus protecting the remainder of your open position. So this is good for scaling out in your strategies. This is an interesting one. I don't think I've worked with this before. I would definitely be interested in writing a script that scales out of positions. We'll look at that when we get around to building strategies out. For the most part, I like to use fixed take profits just to keep things as simple as possible. The more simple my scripts are, the less that can go wrong, but this would be an interesting one to play around with. And then finally, we have strategy.oca none. This is the default setting, and it just means that your orders are not linked to any other orders. Moving on, we have some risk management functions. I've never used these myself, but we can investigate these in future lessons if you want to. Then we have currency. You can set the currency that your results return in. By default, it is set to whichever currency is the main currency of the chart you have loaded, but you can override that here. Probably useful to do this in some of your scripts about the strategy currency results. But if we jump back over to this chart here and I turn this on and we open up the settings menu and we go properties and I change the base currency from default to, let's change it to Aussie dollars and click OK. Now, instead of showing my results in yen, it's showing it in Australian dollars. Now you can see it's only returning $77 here. The risk management system in the strategy tester is terrible, to be frank with you. It's convoluted, it's confusing. I tend to ignore this completely. That's why I write my own strategy simulation here, my backtester simulation, that more accurately returns a dollar amount and a percentage amount. If I set this back to default, you can see that the results are not exactly accurate. There is some discrepancy between my simulated results and the strategy tester, but it's very close. 83% versus 82% and 9.96% versus 10%. But we still have the same win rate, the same total trades. My return in dollars is a little bit more accurate than the strategy tester will give us, at least for Forex. As I mentioned, the strategy tester was definitely not designed for Forex trading. I know that because of the way it manages risk. If you set your initial capital to something like 10,000 and you set your order size, you can only select from how many contracts to open, a fixed position size, which is terrible for Forex because most strategies have a dynamic risk amount. Your stop loss changes based on the volatility of price action. So you're not always going to have a 10 pip stop. Sometimes it's going to be 20, 30, 40 pips. And so having a fixed contract size does not work for Forex. Neither does having a fixed dollar or yen amount. And percentage of equity doesn't do what you think it might. It doesn't risk 1% of your equity per trade. It buys a total of 1% of whatever market you're on of your initial capital. So I have two scripts here. This main script, I've overwritten the position size code in the script. If I open this up and scroll down to my entries, you can see I set my position size and I calculate my position size based on 1% of my equity, and I override the inbuilt strategy tester's risk management system or position size calculator. If I hide that script and open up this one and open up the strategy tester, if I open up the settings menu and I change my order size to 1% of a $10,000 account, you would think that that would risk 1% per trade, but it does not. In fact, it breaks my script. I need to increase my account balance here. So if I trade 1% of a $100,000 account on the Forex markets, I'm looking at 7 yen, 0.01% return. The strategy tester system is just not optimized for Forex. It's definitely more suited to stock backtesting, but I have found several ways to circumvent this using Excel, using Pine code to override how the strategy tester calculates its positions, and we'll cover all of that in future lessons. But that's important to mention. The risk and currency parameters in strategy scripts is kind of useless for Forex traders, but I'll show you better ways to manage your risk in your scripts and analyze your performance results in Excel. Now, scrolling down to the bottom, this is the final section on leverage. This is another thing I don't touch in my scripts. I don't bother with this. But it says here, when you open any position, the margin required to maintain the position will be calculated. So basically, the strategy system will attempt to simulate margin Now, because margin changes depending on what broker platform and which country you live in, what the rules and regulations are, I just stay away from this completely, and I never touch it in my scripts because I know how my trading works. I know what my leverage is capable of, my margin is capable of. I understand how to properly manage my risk in my strategies so that I don't get margin calls, and so I ignore this completely. It's really just not important. But again, when we get into coding the actual scripts, we'll cover a lot of the practical information regarding all of these sections. And so I know this was a big information dump, a lot of info, especially if you're new to this stuff. I probably just made your head explode. Don't worry, it's not as hard as it sounds, especially if you keep things simple like I do and how I will teach you to do. They need to be very complicated. I've written several scripts over the years that I've used to trade profitably without having to touch half of the stuff listed in this article. So now, with all of that said, I'll wrap this lesson up here. And in the next lesson, we will start diving into some code and exploring what's possible with strategy, inbuilt functions, and variables. I'll see you there.